Good morning, everyone, and welcome to the morning pre-market analysis and trade level setup for Wednesday, December the 4th, 2013. For those that are visiting us from Twitter or watching the video on YouTube, Quantum Leap is a self-organized learning environment. We have been around for over 4 years now. We are a private Skype group. This is not a commercial outfit. If you're interested in coming in and checking out our chat room, it is a Skype chat room, so you will need a Skype account, and then you can send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. That's right. Yep, I'm a Canuck. I am the founder and head moderator for Quantum Leap. Each morning we come together and do our homework and get ready to trade. If you're watching on YouTube or after the fact, we do start with the macro to the micro to keep an idea of where we are within the context of the market and context of the trend. So if you're looking for more in-depth chart analysis, you might want to just skip ahead on the video a few minutes. If you want to contact me, you can send me an email at dm@m4connects.com or call me directly on my office line. Please call after market hours. And then, of course, my Twitter is at crazy2, labeled Quantum Leap Trading. So we're going to get going right away. Let's get the legals done. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than the initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan, do your own due diligence. Okay, that's a mouthful. All right, so let's go right to the numbers. Obviously, we have a year high up at 1812.50 that has yet to be being retested. We put in a new month low yesterday. We actually put a new month low in the Globex at 1785, so I'm going to go ahead and change that. That was just put in on the news. And change this. And there's nothing in the macro, the monthly, weekly, quarterly numbers. Yesterday we had a open in the Globex at 1800 and a quarter, Globex high of 1801.75 and a Globex low of 1792. And then we opened right at that CHVN at 1794, which was our target, on Monday. Our extended target. We had 96, then 94. And then, of course, below that, the 92 CLVN, which we used as the line in the sand yesterday. And with the break of that, we are looking for the big number that we've been talking about for over a week now, that 1788.50. Now, we followed yesterday. We had two neutral days. We had a normal day on the holiday, and then we had two neutral days in a row. We nearly got a third neutral day. We came within two ticks of breaking the IB to the upside, and then of course we failed to do so, but we did have a very rotational day with the downward bias towards that 88.50 microcomposite VPOC, but then we pushed through a little bit further to the other side of balance there. And we'll look at that on the composite. We had a lower initial balance. You can see that 2 days in a row now that we've had some negativity come in and a down rotation. Doesn't mean that we're done with these highs yet. Just means that we've got a normal pullback. And then we had, the other significant thing is we had lower value. So we've had 2 days now of lower value area high, lower value area low. broke the IB outside of the pocket again. Seems to be a trend lately where we're making the moves later in the day rather than our normal make and break within that first 15-minute pocket between 9:30 Central and 9:45 Central. And then we had third day in a row with our extended session where we were lower highs and lower lows. Going over to the daily report, obviously we had the the non-farm employment change, the ADP numbers. They came out better than expected. Then we had trade balance and bank rate for Canada. We do have more news coming up at 9 at Central. The non-manufacturing PMI and new home sales. These are two things that can move the market again, so be careful within that first half hour. Let's go up and take a look at where we are. We have a full session high so far at 1795.75 and a full session low at 1785. So for our full session as it stands right now, our 20-day ATR range targets is 1799.50 to the upside and 1781.25 to the downside. This is our daily report. What we do with this is all this information is all pulled into this right here, which is our QLTP. And this is put out into the Quantum Leap Room each night by Howard. And basically it's got a ladder above and a ladder below the previous day close. It's got news. It's got a little work schedule. It's got the open highs, lows, and the Pearson pivots. And then all of these are areas of the market levels that we're looking at based on different methodologies. It's not a trade sheet, it's a trading guide. You want to be able to know where other traders might be activating. You're still going to operate within your methodology, but you need to know that if you're going to get long into a a resistance level, daily resistance level, that or a Fibonacci level, or a composite high volume node, that you might get some traders that will activate at that area, and that's why we put the sheet out as a guide. Let's go and take a look at the macro to the micro in terms of the trend. This is what I like to do every day, never to forget where we are within the context of the different time frames. Obviously, the monthly has been extremely strong. We have not had a close below the 20 SMA on the monthly for the two, this year and last year. We haven't had a close below the 9 all year this year. Good slope and separation on the 9 EMA and the 20 SMA. Those are the moving averages I like to use, and the trend is very strong, and we're trading in the upper distribution of the prior month. Going over to the weekly, same thing. We had a couple times this year that we came down and tried. We've only had one close below the 20 SMA all year, and that was when they were waiting for the news announcement for quantitative easing. Big rumor was there was going to be tapering. Then they announced, QE forever, and then this is the government shutdown. It looked like we were going to get another close, and we were seeing some weakness, but then they came to that agreement, and bam, we popped up and resumed the trend, and currently we have good slope and separation. A little bit of a technical gap right here against the 9 EMA. This should be closed out by price and time, and you can see that we've come down a little bit. I don't know where we'll close. I think it's going to be somewhere around 1778.50 is where we'll actually close this latest technical gap that we've got. But overall, the trend is strong, and we've got good slope and separation. Going to the daily, you can see that we've got a little bit of weakness coming in the last 4 days. We closed this technical gap on the daily. We've come down and tested the 20 SMA, and we're currently trading right on the 20 SMA right now, but we do see some weakness. We've got a possible head and shoulder setting up here. If we bounce off of this 20 and pop back up and fail to make new highs, we could see a head and shoulder pattern with a neckline somewhere in that 1778, 77 area. So possibility, but overall we're seeing a weakening of the trend and possibility that if we break through this 20 SMA, we can start a downtrend on the daily. Let's take a look at the geometric chart. There's 3 forks that I've got on here. The longer term fork we've been following for quite some time, months and months and months. The secondary upward sloping fork we've been following for weeks and weeks and weeks, and then last week I added this new fork that is a modified shift fork. And you can see that we had rejected the upward line of the new fork, and we'd come back and come down and tested the center line. We've gotten back inside of the long-term fork, and we've broken below the midline of the midterm fork. Couple energy points to keep an eye on. This is my extended target down. I'm not thinking we're going to see it, but we have to pay attention to it, and it's down here at the 1750 area. This is the intersection point or energy point between the midline of the longer term fork and the lower line of the midterm fork. Right now, I'd be watching for a move back up to test the center line of the new modified fork today. That would give us a move back up to 1792.75 area, or come down and get some continued weakness and bring us down into that 1768.69 area. If you remember, that 1768 was an area that a number and level that we were watching and trading off of when we were trading in this area right here. But other than that, there's really not much more that this can tell us, or information it can give us for today's trading. Let's take a look at where we are within the longer term. Again, I don't know why my 4-hour chart is doing this, but just bear with me for a second here. So yesterday we talked about in the 4-hour the trend had shifted and we were starting to trend down. We've got good slope and separation. We've closed this latest technical gap overnight, come up and tested the 9 EMA from below, rejected it, and continuing the trend down. So the overall trend on the 4-hour is to the downside. Going over to the 30-minute. Same thing. We've got a rollover. We consolidated, rolled over. We do have a naked cross here at 1793.25 on the 30-minute, and for the most part, we've created a little bit of a technical gap. Came up to try to close it, but haven't closed it yet. But we do have some slope and separation happening on the 30-minute. So the 30-minute is also showing weakness. Let's go one level more down to the 5-minute, and the 5-minute is still telling us the same thing, that the overall trend on the 5-minute is down. We created this technical gap with that push down on the news, or before the news came out. We popped back up and tried to get above the 9 EMA, failed to do so, and currently trading below the 9 EMA, and we do have slope and separation. So going into the RTH session this morning, we do have some weakness coming in. Let's go over and take a look at the composite, see where we are within the big picture. We had sorry, man, I've got something in my throat this morning. We had created this balance area, this micro-composite balance that was centered around the 1788.75. it's shifted. I've got to push my tick data back a little bit to. It's really should be 1788.50. But because we're getting some of these days that are going beyond the number of days that I keep my tick, sometimes you get a tick difference here and there. But like I always say, what's the difference? What's a tick amongst friends? But anyway, we found balance around 1788.50. Then we launched up, tried to hold value up here. We found value first at 02 1/4, then moved up and went and put in that new high. And then we came back and we tried to hold value in around this 1804.75. Couldn't hold value, fell out of balance, came down. Where did they come down to? Right where we were looking for them to come down and pick up buyers, down here at the 88.50. Pushed through to the other side of the balance at 86 1/4 to the tick. The responsive buyer stepped in and held us up and rotated us back up. Tried to get back through balance, the other side, the upward side of balance around this distribution zone. Failed to do so, and we closed at 91.50 area. The profile, I'm going to go into the intraday in just a minute, but the profile itself was very sloppy yesterday, and that's why you see that we did not have a lot of conviction between the buyers and sellers of what was fair value. So we were all over the map, and the profile, the intraday profile yesterday is very ugly looking, very toothy. Nowhere is it showing where true value was held. And that's why we get these wicks. And anytime we get these wicks, we always have to worry about, are we going to get stuck in the wicks? Because this is improper auction territory. And my main hypothesis, I have two main hypotheses today. My main hypothesis is that we get stuck in the lower wick between 82 1/4 and 92 1/4 with a possible pop up to 94. Or we break back above 92.25 and we get into this area between 1800 and 94, and we chop around there. That's my main hypothesis. It's pretty simple. Today it's going to be, I think, going to be choppy. It's going, and we're going to get stuck in the wicks, either the lower wick or the upper wick. Take a look at the levels. Obviously, the big number where we're trading right now is the 1788.50, 1788.75. You've got two undetermined fair values down here in the lower wick at 90.50 and 87.50. Remember, our close is also 91.50, so that's going to be an attraction. Our overnight high and low is 1798.50, so that brings us up into test this range high from the, that's the RTH high from yesterday. Our overnight high was 95.75, which is this CLVN right here at 1795.50. And then our overnight low is at 1785, which takes us down into this CHVN. So right now, you should be using a major line in the sand for the shorts at 82.25. If we get below 82.25, then we're breaking outside of the value area of this micro composite and balance at 83.75. So if we hit 82 1/4, we've already broken out of value, and then if we get through 82 1/4, I'd be looking for a move down to the 1778.25 with a push through down to 1774.50. Our ATR target to the low side is 1781.30. But if we get any extension today, I'd be looking for extended target down here at 1774.50. I don't think we'll get much further than that, and that will test the CLVN, but it also tests the range of the prior balance that we were in. You can see the bottom of this is at 1774, and if we break out of that balance, the big move down, and that move down to test that lower fork line is at that 1768 area, or that 1767.75, which was the last most accepted price before we broke out of this bigger balance, okay, below us. So that becomes a major target below. If they can't hold value up here in the prior balance area and they're going to price discovery to look for buyers, this is the most logical place that you'll see them come down. Don't think we're going to hit it today, but it's something that we have to keep ourselves aware of. Above 82 and a quarter, I think we've got chop in this area. And then if we get above 92.25, then I'd be looking for a move up through to 94 and a push through to that 1800 level and chop around in between these two wicks right here between 1800 and 94. So let's take a look at overnight and move our numbers over for our intraday chart. You see we have a double distribution last night. We tried to hold around the VPOC here at 91.50, right where we closed. We've got an LVN overnight at 1789.50. I would pay attention to that because I think it's going to, it's right there above the 1788.50. And I think it's going to be an area that we can possibly come up and test and reject during the RTH hours. And then we've got this lower distribution, with value or HVN, the high volume node, in around this 88.50. And of course that's no surprise because that's the most accepted price in this distribution zone. All right, so let's just get rid of that and move our numbers over. Overnight high 1795.75 and overnight low 1785. And again, we could get a lower low before we get into the RTH, so we have to be aware that we are showing some weakness right now. And then the VPOC, overnight VPOC, I don't think is going to shift, which is at 91.50, which is sitting right on top of the RTH naked VPOC from yesterday and right on the close from yesterday. So taking a look at our levels and where we're trading right now, obviously we have a possibility where we're going to open up just inside of the range from yesterday or just below and outside of the range. So we could get an open auction out of range or just barely an open auction in range. So, I'd be watching, if we open inside of the RTH range from yesterday, I'd be watching this 86.25 as a possibility to go down and test it. You've got that 86 and a quarter CLVN there as well. And of course, if we break below that, we're likely to go down here and hit the overnight low and the CHVN at 85 and a quarter and push through to this 82.25. So 86 and a quarter I am going to use as a trade area. It could be fast and furious on the open, but it might be, a clue. Now I am anticipating if they try to break out, and they do break out of that range, that we will see responsive buyers stepping in here between 85 and 82 and a quarter. So I'll be watching this area, but I'll really be using the 82 and a quarter area as another trade zone below us. If we get below the 82 and a quarter, you see we still have a naked close down here at 1779.75. which is just above this 78 and a quarter, and that's going to be my first target below us, is that 78 and a quarter, and take out the 79.75 naked close, with the other side of balance being down here at that 74.50, and that will be an area I'll also be looking for responsive buyers to step in and rotate us back up. Oh, come on. And then, of course, if we do get below that, the big target and the extended target below is the 1667.75, 1668 area. If we hold value, or we come down and take out the low and they find buyers in here and they get back up inside of the prior day range, first level of resistance is going to be right at the microcomposite VPOC at 88.50, which is also our value area low. That we could get stuck in the tall weeds, as Murad likes to say, and slow us down there and possibly halt us. This is going to be a trade area for me. If we get back inside of value, then I'm looking for the gap close. We have a fairly decent gap. I'd be looking for a move to close the gap, take out the naked VPOC, come back into balance from overnight, and test this level here with a push through upwards to our favorite number that we've been trading off of is at 1792 and a quarter, and that's going to be an area where we could see some resistance coming in. So I'll be using that as a other trade area. And then if we get above 92 and a quarter, again, look for a move up to 94, a test of the range high at 95.75, and then we've got the value area high up here at 96.50, which is just above this 95.50 CLVN, and this is going to be an area that I'll be looking to do business. And then, of course, if we get above that, I'd be looking for a move up to test the range high at 1798.50 and a chop in between here and 1800. But I will be using 98.50 as well as a area to do business, and my main target above is going to be a test of this 1800. This overnight high is already from yesterday. And of course, we have an extended target up here at 1704 area, which is a naked VPOC and that CHVN, and right around the prior microcomposite VPOC that we fell out of balance. So that is my extended target above as well. So that's what I'm looking at in terms of the volume levels. We've got a naked cross still at 1796.50. which is right there at the value area high and that level. And then we have a naked cross at 1793.75 and 1793 and a quarter. So we've got some confluence in around here in that opening swing low from yesterday as well. All right, so that's where my levels. I'll post this chart in just a couple minutes. Let's take a look at where we are within the Keltner. We are in the lower channel. We do have a slope to the downside. A test of the upper Keltner will bring us up to that 1789.75. So that is a test of the value area low. A test, if we break above that and we go up and test the upper Keltner line, that'll bring us up into that 1795 and a quarter, and the value area high and the overnight high and that naked cross up there. And if we come down and test the lower Keltner channel, that brings us down to the 1784 level, 84 and a quarter, and basically just below this CHVN at 85 and the overnight low. So that would take out the overnight low, and that's my anticipation for the open, is that we open up, they try to break it out of range, come down here, take out the overnight low, test the lower Keltner channel, and test this 82.25. Have responsive buyers step in, rotate us back up, and chop in and get stuck in this wick here. Secondary hypothesis is they do that, they hold, they get back inside of value, we rotate back up, and we get chopping in the upper wick. Pretty simple hypotheses today. So just take a quick look at gold. I am still running short gold, and we went all the way down overnight. We got down to, didn't quite get to that, 1203 area that we are looking for, which is that former microcomposite VPOC where we picked up buyers for the last big run up. We got down to the low, which was 1210.80, and then we've rotated back up on the news this morning. Pretty strong spike in gold this morning, and currently we're trading in around that 25 area again. I'm going to bring this into the prior level. We've got the value area low for the microcomposite is 1230.80. Just above that is the CHVN at 32. This is my main target above. Remember, we've got that CLVN we'd have to get through. 2 days ago we were talking about this being a line in the sand for a rotation lower, which our target was 215 and 203.50. We came down to the 215 yesterday and then held the rest of the day, but then overnight we fell out of it and went down to the 210. Didn't quite get to the area that I was anticipating, but 1229.50 is going to be between there, and that 1230.80 is going to be resistance above. If we get above that, look for rotation to 32.60, back into that 41 area, and then the big number again is still up here around the microcomposite VPOC at 1246, and with the other side of balance being that 1254 value area high to the CLVN at 1255.30. Again, I think we're in an area that's pretty blunt on the composite, so I think we're going to see a lot more chop, and probably chop between 16 and 32 today. And if we do get a continuation up, look for a move to test that CLVN at 36.80, and if we get above 41 and 46. So that's what I'm looking at. Howard, over to you. I know I went a little long, Howard, sorry.
So looking at the daily chart, we had our high of the year at 1812.50 back on the 29th of November. Had a bearish engulfing following that. Continuation yesterday that had us come down and almost test right to the tick, the 20 SMA for the daily, give a slight rejection. Overnight we came up and tested the 9 EMA from below and rejected, and we're currently now testing the 20 SMA, so that will be a key support level that we haven't broken below for quite some time. So if we break that support, that indicates further weakness in the market and potentially lower prices from there. So right now it looks like we have good boundaries between this 20 SMA and this 9 EMA for price, and whichever one we break will probably indicate the midterm direction of the market. So looking at market breadth, I tried putting my ES symbol in instead of the SPY, so it looks like whatever chart issues they had some time ago have been resolved, so I can show all of these indicators for the ES symbol. And I'm showing in the middle chart advanced declines on a 10-day average basis, and in the lower chart up volume versus down volume on a 10-day average basis. This line here represents the midpoint where advancers equal decliners, and the same for up versus down volume. And since we had our interim bottom here on November 7th, we've been getting a little stronger in terms of breadth in the market. And then we hit a top here in advanced declines on the 27th of November, and actually had an earlier high in terms of up-down volume on the 21st of November. And currently we are in both exchanges, in both measures below the 50% level again. and the NYSE in blue is actually broken below the last swing low. The NASDAQ still hasn't quite done that yet in terms of advanced declines, and the same is true in up volume versus down volume. So it looks like the NYSE is leading the charge lower, NASDAQ a little less weak, but still looking weaker. And if we break below this low, it just adds additional non-confirmation from the high we put in back here on October 22nd. That's the high of both of these indicators, but you can see, price has made higher highs. Over here we have lower highs. So we've been having this non-confirmation coming into effect back since October 22nd. So it took almost a month and a half before we started seeing some weakness as a result of this non-confirmation, and we're seeing that now. So we'll just let the market determine whether this is just another correction, and we're going to start increasing market strength back for another charge to a new high, or whether this is a more lasting top, at least on an interim basis. Now let's look at our sectors. Still slightly mixed picture. We have several of our leadership sectors starting to show weakness along with the ES. There's a couple of sectors here, technology, energy, and consumer staples, that are flat to slightly higher. Utilities has kind of found a support here, but home builders and materials are showing more weakness. So we're still getting a mixed picture, but generally the sectors are showing weakness, but they're not all in sync. And finally, we'll look at Dow transports versus industrials. And no real change here. Transport still maintaining their gap above the industrials. So with that, we have just over 6 minutes to open. So I'll turn it back over to you, Doug.
Great, Howard. Thank you. This will complete our morning market preview and trade level setup. As always, trade well, trade safe, and we'll catch you on the flip side.